Hello, everybody, and welcome to the Thanksgiving holiday weekend edition of the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and I am here with Barrie Hederachi. Hey, Barrie, how are you?
Hi, Ben. I'm doing okay.
Have you gotten out of your alcohol and tryptophan-induced coma?
Well, that was suddenly came to a stop Friday morning.
I know I rolled into the office on Friday morning thinking, let me just check in, see how the prices are doing. Like, whoa, there's some serious selling going on.
Exactly.
Which is kind of exciting because, last week we talked about, something was up. The charts were telling us that, you know, things were off a little bit. Something was going on. We weren't real sure. And that's how it manifested. So we definitely picked it up in our reviews and hopefully, people that listened to the show got some warning. But this week we're going to go over sort of the aftermath of what happened, how did it affect certain charts, what markets look good, and sort of what we can look for in the coming week. Bitcoin was one that we talked about and highlighted. Every week we talk about it, but last week we highlighted the issues with Bitcoin and how once we broke out of this wedge and then lost this support of the full square, we were in a vulnerable position, and we saw it twice. Try to get above the square, try to test this area, and on the second time it was a blatant failure, and we saw the fast move down. Right now, Bitcoin continues to be in a weak position. The most likely destination is this half square in the 50,670, 680 area. On the positive side, we are coming into support from these previous highs here and this 3/8 line. But I think the weight of the evidence supports more down on Bitcoin. Where are you on Bitcoin right now?
Pretty much the same place, and I think that 50,000 is a pretty big marker right at the half square.
Mm-hmm.
And I think we're probably going to go and test that. So we'll see how that goes.
Yeah, and the charts support that, the odds support that, so that is the most likely next destination. Also, we have a spreadsheet. I want to make sure everybody knows that has all the levels that we're going to discuss for not only the markets that we cover, but all the markets that we follow. We'll post the link to that. Make sure, both on the video and on the spreadsheet, if you give us your comments, give us your feedback, like it, hit the bell, subscribe, all the different things that YouTube and Google Docs want to see, because that gives us good feedback in terms of the content we're providing. So please make sure and do that if you find the content useful. And with that, I'll flip it over to you, Barrie. Let's go over the big five and see what happened with all the activity we had on Friday.
All right, let's do that.
Man, that 46.93 was a good number, wasn't it?
That was the level to watch, and well, it paid off, eh? So
yeah, yep.
So to pick it up from last week, we were looking at 46.93 to hold. That was a key level, and the reason we were focusing on the 46.93 was because we did have a couple of time cycles that expired at the high. And when that happens, so here's one of them. This is the, let me make it a little bit bigger.
Is that your weekly?
No, this is the daily, but it's a calendar day chart. And you can see, we went up to 45 days right here. And that was a 45-day run up. And that's normally a good ending for big legs. Big moves normally blow off, or they exhaust themselves in 45-day cycles. And here, this is pretty close to textbook as it gets. We went in there and we had the classic false break before everything sort of got real weak, in a hurry. And so we had the 45 here, and before that we had the 36 right there. So everything sort of lined up. And then we had, from the 2020 low, we were up 432 days. going into this last week.
Mhm.
And that's what, 6 squares of 72.
72, yeah.
And so that's important because we react, the market reacts to the 72 vibe. You can see it happened here, again, a little bit here and here, a couple of days here.
Also,
So,
the half cycles as well.
and the
Look
half
at
cycle hit, the pullback into the low here hit.
multiple hits on the half
This
cycle.
one, yeah. So it's a kind of a common cycle. So when that lines up, which is, it's not every day, it's every 36, 45 days. You want to look at those. And then that we look at the levels to see, can the market hold above these levels or not? And normally if it can hold above, then we know, the cycle really didn't pan out. And if it gets weak and, if market turns, then we know the cycle probably kicked in. So that being said, looks like everything lined up there. Let me just go to the weekly chart. So on the weekly chart, we looked at several things last week, and we've been looking at this high coming in. We had a lot of, like I said, we had a 36 cycle the week before, then the 45 afterwards, and we've been watching it closely and not getting too bullied up about that. And here we have 3 squares of 52. This is 52, and that's 156 level on the 52-degree square. I'm sorry. So this is a weekly now. Earlier it was a daily. This is a weekly chart. You can see how, so it's 52 weeks. 52 square is normally the one we use for, it's the base square for weekly charts. And we can see we stalled there for almost a month, and then we turned down. Now we've got full bars up there.
Yeah, and that stalling was what made you and me cautious, because we kept saying, until we can get on top and sit on that square, we're vulnerable.
That's right. And because of that, I'm thinking this is probably not just going to be a quick buy the dip and run, just because of the number of cycles that expired. Mm-hmm. So obviously it's a market and anything can happen, but a weekly, normally that turns down at a key level, normally has a little bit more to go. So it's possible this is something that's just getting started. So at least be aware of that. And getting back on the daily, so I think the 46.93 was the level. Now we're going back to this 45.60, which is the level that we were looking at, back in October, November. So I think this 45.60 is 45.50 to 45.60 is a very critical level. And if we're going to hold, we should hold here at least for a quick bounce, right? And if we don't, the next level we have is around 4,500. So we have 44.90 here. So 4,500 to 44.90 is a level below that. These are the 2 support levels. I kept it on from, when we started using it in September, October. So it's still there. And the other thing to notice is we're halfway, we got through the 50% of the square. And you can see we tested it. We talked about this last time, market broke up above it, came back to retest it, which was super healthy, and we took off. And then we noticed a false breakup here. We talked about it last week, I believe. Mm-hmm. And, and now we're below the square. So that means, not everything's really exactly perfect. So something's up. And so now you guys have the levels. The halfway to square is 46.22, but 46.25 is the level that we're using. And I'll post that on the spreadsheet. So 45.25. So 22 to 25, let's just go with 25, is the level we really need to hold Monday, Tuesday, Wednesday. If we can get above it, if we can hold that, then I think we can make another run up and test the highs. Otherwise, we're looking at 45.60 or 44.90 to the downside. Anything you want to add to that?
No, just that, that 45.50 to 45.60 area is key. I have weekly support around 45.54. So right in there, it's critical if the bulls are going to, make a stand, that they have to hold that area.
Right at the old highs up here, right?
That's right.
Right in there.
Yep.
Okay, let's go to bonds. So last week on bonds, we talked about this 58.28 or 59 area being critical support or resistance, and that we, if we're going to go higher, we need to hold this on a pullback. And last week we came right to that line.
Look at that low. Perfect.
Right on it. And remember, we got this triangle going on also, right? We were looking at this, I don't know, maybe a couple of months ago. So we're looking at this, and we came down to 158.28, almost at the tick, rallied hard. And this is our recent attempt to break this trend line.
First close outside of it. First close outside
exactly.
of it.
So now we know this could be out of the gates. As you can see, we were holding this lower trend line, pushing higher and higher. Now we have a lot of higher lows showing up. And if we can take out the high on November 12th high that week, and which is 164, if we take that out, then clearly we can go up and, much higher and test the 170 level.
It looks like an outside reversal bar too on the weekly.
On the weekly it is. We looked at 160.20 being the critical level to get above, and we got above that, and now we're back in the fray. 164.26 is our resistance level basis daily, so these are the number to watch. So for next week, 160.20 should be held on any pullbacks, and if we hold all of that and can manage up here, then 164.26 will be the upside target for now.
Mm-hmm.
Right.
Certainly fits with a risk-off environment, doesn't it?
Exactly. And if you notice on the daily, we took out this high from last week, so we do have a higher low and higher high now.
Mm-hmm.
Right. So things are changing slowly. Take a look at crude. Crude, we see in October we talked about this high squaring out and calling for to watch out for any positions, and that the market's soft below that. And the market held around, went back up and tested it again in early November, and couldn't do it and failed. And we've been giving out some level. 77 was the last one. We said, it really needs to hold above that. And we couldn't, last week we'd struggled. And Friday, of course, we just gave it up and came down to the quarter square and stopped exactly. But I think for next week, if we were trading crude, there are a couple of critical levels. 69 is really a level we need to hold or get above, I should say, because we're below 69. 69 is critical to see if we can get above that. If we hold for 69 and we can settle above it, I think we can call that the low we have in place decent support, and we can look for a little bit of a rally. And above that, 69 is the resistance now that we're looking at for next week. So support is 65 for next week.
Mm-hmm.
And if we can get above 69, I think we can get up and test the 77 area again. So those are the two levels for next week: 65 support, and 69, of course, is a support resistance level, and we want to see if we can recover that.
Barry, you and I were talking yesterday and early this morning about crude, and you brought up a really great point that there were so many bulls up there that it is quite possible. We don't have enough evidence yet, but it's quite possible that this was a flush to wash out a lot of people.
Certainly could be. It could be, and if it is, it'll be. It's a good one. Right?
No question.
Now, and sometimes these flushes come, after these cycles. So, it's possible that we did that. I didn't see this kind of a break coming, but it was weak, long as we were below the half square after the square. So
we were expecting more of a congestion, maybe work off some time.
Exactly.
Hold that high near 77, but man, it had all the earmarks of a flush on Friday, just panic selling.
Clearly, yeah.
So
for next week, we'll bracket this with 65 and 69 and see how that plays out.
And if it shapes up and we get some decent signals intra-week next week, we'll post something on Twitter. So, but we definitely need to see more evidence. This is just a possibility. It's not a high probability at this point that it was a flush. It's just something we think about. You got to always talk about thinking like a criminal. And this is a case where you have to put that hat on for a second and think about it and see if price confirms that, then you can act.
Now, going back to the weekly chart again, square 52, we did square out up here about a month ago. We talked about that, and the prices have been soft since then. And this is, it's a decent correction for that type of a square. Now, the question is this a long-term, sort of did we just start a new trend, or is it just sort of a correction? So we'll see. I mean, that correction is fairly close to this one. And so it's possible it's something similar.
We just have to see how
I would
price
say
action.
I would say testing this the top of the 52 square wouldn't be out of the question for this type of a architecture, right? This kind of a move. So keep that in mind. Go ahead, Ben. You're going to say something.
I was just saying we have to see how price unfolds, Sunday night, Monday morning, see what kind of reaction it has, to give us more clues to what's really going on.
Yeah, short term for sure. That's true. And I'm just looking at the weekly to see, how it might place. Because it kind of stalled at a weird spot, right? It's kind of in between lines and in between eights. So it's either we're gonna clear very quickly, or we're gonna go back and test a little lower. So we'll have to
the only thing I could see is that the reason it picked that spot is if you look at the highs from February, March, it's settling right on top of those.
Over here, right? Yeah.
No, over here in early 2021.
Just recently, yeah,
the recent ones and the other ones too.
Right. So we got this kind of right in there. Yeah, that's a good level. Look at this, even up here, right?
Right. Slide it over and you pick up all that price action, and it catches the low on that Friday move.
I mean, given the macro view, it's possible that we hold here and we continue our run, right?
But price has to confirm.
Price has to confirm, and it's going to take more than a week to recover this.
Yeah.
So we'll see how it turns out.
It's going to take them a week. It's going to take them more than a week to carry the bodies out that got crushed.
Exactly. So let's go on to gold, and gold's been very interesting, right? We, last week, we had this big breakout. We were consolidating up here, nice and tight, looking all bullish. And what happens last week? It just starts to get weak. And just to say, I'm not sure if we looked at it last week or before, but we are 180 bars, 180 days from the March low of earlier this year. And so, that is a marker, right? And gold, it doesn't necessarily vibe with the 90s, but here we are. So it's possible. But in the big picture, we've been looking at at this fork and some of these levels we had. And 1832 was the level we really wanted to see gold hold above. And if we were going to go higher, 1887 was the number that we really wanted to take out. And so 1887, couldn't get quite close to it. 1832, we just gave it up like nothing was there. So now we're back to the main, the big support level that we were using most of all year before we took off. And that would be 1765 area. So for next week, I'm expecting gold to hold above this, mainly because we have the fork, we have this, it's quarter of the square, so we have a lot of stuff here around 1760, 65. So that's what we're looking at. Clearly, obviously, if it breaks through that, then it's possible we go check out these other lows down below. So no question about that. Let's look at the weekly gold like we always do. And last week we talked about the breakout we had, and we had this triangle drawn in. So if you guys are first time, just go back a couple of weeks and, check out the last 2 or 3 shows, and it'll, it's the easy way to catch up to the story, and you'll see where these lines came from. And normally, we draw all the lines and everything while we're recording. So it's clear to see what's happening. And if you guys, like the stuff, please give us likes and share the videos and click on the bell for alerts. And Ben, we got the first down thumb last week, the dislike. so make sure you guys are giving us likes and not the other button next to it, right? But
I bet he was short natural gas. That's why he gave us a down.
I don't know, but I thought it was funny. Now I feel like, okay, now we're really in this, right? So all this time it was all thumb up, thumbs up, and
right,
thumbs down for the first time. But we got the most number of likes last week, which was nice. So
interesting.
It's very cool.
Yeah.
All right, getting back to the weekly gold. Look, we last week you drew up the little box, and I talked about how this is a key resistance here, and we really need to take this out in order to start a leg up. And so we couldn't quite do it. Now we're back in the fray, back in the triangle. So it looks like I drew some of these dotted lines a while back. So we're in this big triangle now. Again, we haven't really done anything other than go back into the fray, and we're coiling and pressuring in here. So the overall long-term, meaning weekly, monthly view hasn't really changed much. This is still holding its own, and if anything is coiling up further, which means the whatever break we're going to get is could be even stronger.
Yep.
Anything you want to add to that on the weekly?
Just that the 1835 level was big for me when we didn't hold that. It in looking at the weeklies and the monthly and the daily and looking at everything, to me this is just a pullback. As long as we keep a higher low than the September low, I think this is a good healthy pullback that is setting up for a potential fast move higher if we can put in another higher low. And reverse we're going to be watching this like a hawk, this and silver. I'm not going to talk about either one today because they're not ready yet, but I'm watching this week to see if they set up.
Right. I mean, ever since the March low, we had that one run up into June. Ever since that, if you look at the rest of it, it's been like reading tea leaves, right? Because it's just been up a little, down a little, up a little. So
coiling.
The only difference here is now, even within the range, we made a higher high.
Yep. And higher lows have been coming in.
And higher lows are following. So that's why I'm saying 1765 is critical to watch here, because if we take that out, then we take out this higher low. Yeah. And that means that other scenario is going to be stalled out for a while, and we might go check the low. So that 1765 is going to be critical. And if somehow we get above 1832, well, we can assume we're going to take out these other old highs relatively quickly.
Yeah, I agree. I think if we get that reversal up, it could be go time for a fast move higher. So we got to watch that like a hawk. That and silver this week. Right.
Let's go and look at the dollar. Something else we've been bullish about, right?
It got a little comeuppance on Friday.
So the dollar, well, we're bumping up into new territory, and top of this channel met up with some resistance and, well, a little bit of a pullback. So going into next week, I would say, this 95 level was our target from earlier this year. So now, that resistance turns support. So basically the thing to watch, as long as we're above this 95, everything's intact and very healthy. And if you look at the structure wise, as long as we're holding above, the October highs, it's very healthy, right? So I don't think this is something, I don't have anything that super negative here, other than to just watch the 95.20 level to see if something goes up, if something happens there.
Right.
That said, we could make a low into the 135, which is the half square, 90, 135, and then 180. So it's possible we come down into here somewhere in this level and test it. I'll update these levels, in the 95, 15, 20 area. I'll add it to the spreadsheet. So the spreadsheet link is at the bottom of the description. So make sure you guys check that. And let's take a look at the weekly weekly dollar. We left it here last week.
Fork stopped it
Yep.
so far.
Very, very strong. Went up into the fork area and we just backing off again. I don't have a whole lot here to say that was some kind of an ending for the leg. Not just yet. So we'll just go with the 95 area support and see how it plays out. Maybe next week we'll get a bit more details. But it looks like there's more upside left.
The dollar, like a lot of the markets we follow, we need more information. We don't have anything conclusive on a lot of different markets right now.
Yeah. Other than the technical stuff we look at. So technically here, it's, we're okay. This is just sort of a normal pullback so far. I don't have any terminations up there. And while we're there, might as well look at the euro. So daily, where were we? We were here last week. We were talking about this quarter square around this 138, around 138, 139. This quarter square being resistance. And if we can't get through that, we're probably going to go to the next half square, which we did promptly last week.
Perfect test of that half square, right?
Perfect test of the half square. And we've got a nice bounce off of that. So I'm sure there was some level on the dollar that got hit also. But so, normally these are mirrors, right? Dollar and the euro. So that being the case, again, if you're watching the euro, then this 138 area is still the resistance. And if we can't get through that, we're probably going to go back and test these and maybe even go lower. But for now, those are the two levels. The half square level is around 121. That's 1.12.
1.2.
121 if you want. And the one above is 1.3839. That's a bracket there. So the weekly has been, this has been such a good chart. After we broke down through here, we've been weak going all the way. It looks to me like we might just do a 90, low to low 90. And that's why I see the dollar doesn't look like it's quite done. And this really doesn't look like it's done either. And
so Barrie, spend 1 second and talk about the structure here where we tested this line, broke through, and then came back and retest. That's so important in our work and how we trade.
You mean here?
Yeah. Yep.
In one sense, it's just very basic, right? These are the most basic patterns you can trade. And it's funny that you ask, because normally we don't even think about these. Those are just normal patterns that we that we just take for granted, right, and trade those. Well, here in this case, it was a little bit important because it was also the half square, and as you saw, we held that square on the first run, and tried to rally, failed, and then the second time it tried to get tested, it failed and dropped out. And going back to not much to say other than sort of repeat what we talked about last couple of times, which is how we treat these levels. That being, to us, these are sort of decision points. And if a market can't hold above, that means it's probably going to go much lower on the other side. Or if it holds above, then it's probably going to, go further in that direction. And because of that, these points end up becoming very low risk entry points. And that's how we use it. Just like during the day, we use, for day trading, we use those fuse lines. And Ben, you use the ping pong tables, right?
Exactly. Yep.
Trading.
Yeah.
And mainly it's just really about levels and having we know that the high probability of a line holding one or the other. So we try to use that as an edge.
That's good. I think that's helpful to talk about.
So here, we can look at a 1, 2, and this being a 3, which it certainly could, right? Or it could be a 1, 2, and this is a 3. So either way, no matter how you count it, this looks like a 3, and we're probably going to go into some kind of a consolidation soon. Because these things don't really run that long if you look in the past.
Right.
Well, that's all I got. Let's go back and look at the stuff you got to share.
Fantastic.
Well, I remember looking at this like it was yesterday.
Yeah. What did we say last week? We were talking about, we didn't have the benefit of these 5 bars, but we were right here, and we were talking about, if you looked at this market, everything looks healthy. Everything's good, completely bullish. We tested the square, pulled back, and then broke through the square, and we're fully, heading up to the half square. But when you dug down beneath the surface, you saw that it was, a handful of stocks that were pushing this index. And that makes you sort of pause from experience, because that means you're vulnerable. Doesn't mean, it's going to crash. It doesn't mean it's going down right away. It just means it's vulnerable. And it played out last week. We had this outside reversal bar on the first day, Monday. Then we, danced around this full square for 3-4 days. And then Friday, it gave it up. So are we vulnerable?
We talked about the bigger stocks last week or the week before. You were asking me, and I said, yeah, look, when these leading stocks are starting to square out and
absolutely.
Yeah, that was last week, I think.
Because that was the thing. We had this concentration. I think 5 stocks make up 25% of this index or more. I'm not sure what the numbers are accurately right now, but it's a really large percentage. And they were running, so the index was running, but things weren't so healthy. So from here, what does it look like? It looks like we have a test of the full square, possibly in order here, which is, around 15,700, which would, fit nicely with the highs we made in August, September. And we have this trend line coming up off of this, these 2 lows here in September, October. So we got to see. I think this is another market where we need to see more price action, more information. After the big down, do we get a little more sideways here? Do we stabilize? Do we have to go lower? We have to see.
Well, since we couldn't hold the square, that half square surely seems like the next stop.
Absolutely. I mean, that's the magnet for sure. We knew up here there was a strong probability that if we didn't get over that, we were vulnerable, and that played out. And that's, again, how you try and use these squares. If we come down and we test this and we stay on top of it, we know that the probabilities will then favor that we're going to go back up and at least hit this full square. So right now we're kind of in no man's land. We want to see what happens. The weight of evidence does support going down to the half square. So we have to see how it plays out. Real quickly, I wanted to Barrie did a pretty thorough review of the ES. I just wanted to show something that I've been watching here. My issue was at the half square. We were kind of sitting on it, but couldn't get away from it. We broke through Friday, but look at where the low is, right on the trend line.
Right.
In talking with Barrie, when we have our chats, Friday afternoon and this morning we were talking, I was like, I'm not sure what's coming. Right. I don't have a strong probability one way or another. There's a possibility that this was one big bear raid, kind of bullshit move to shake people out, or we're gonna go down a lot. I think it's a coin toss right now in my work. I need more price action. I need to see, some more, like Sunday night, Monday, what's going to happen to give me a better clue as to, what's coming next. But there's sort of all these little nuances of where, well, when it was happening on Friday and the setups we had, I was like, okay, here we go. We're going to get a decent leg down. And now, in reviewing things, there's still the possibility that we're going to get that decent leg down. But there's also the possibility that this is, a 1 or 2 day wonder here, and we may stabilize and chop or do something different. So I don't know how you feel about that, but that's kind of where I am in this sort of nebulous area of what to expect next.
Well, I always go back to the squares. We had those 45, 36s that came in. The 45 really clicked it over. So it wasn't out of thin air, right? We saw this coming. We saw the softness. We saw it hitting some numbers, right. And that being the case, intuitively, I would say we're not done yet. And if nothing else, at least we have to, do the first pullback and see what happens, right? What gets unloaded or loaded up there,
Exactly.
especially around your 50% line there. So let's see how it goes. I think, and this we were talking about this morning, and every time, the market moves on some kind of news, my bottom line is, you just go completely technical because we can't figure out, what the news means or that means and the other thing. So I normally just, rest on the technicals and trade it that way.
Yeah, I mean, to your point, also, it's not only figuring out what the news means; it's what's the reaction to the news going to be.
Exactly.
It does get very complicated. So anyway, that I'm just throwing that out so people can see that we don't get wedded to any scenario. We're looking at possibilities. We're looking at probabilities. We're looking at what could possibly happen. And so I always keep the head on a swivel and sort of seeing what's possible.
I'll tell you one thing, though. I think it's clear that it's not going to be simple. I think it's going to be complicated.
Agreed.
No.
Agreed. One of the chart lights, one of the things I like to do, and one of the charts I wanted to highlight, it fits in that scenario. Whenever we have a big down day or there's a big move in the markets, like we saw on Friday, in this case, it was a big down. I try and look at what was up on the day, what was bucking the trend of pretty much everything else. And then I want to dive deeper into that and say, okay, what's the setup there? Why was that up? Why are people interested in owning that? And is it a setup that is going to continue to potentially do well? Well, one of those things that fit the bill was the 30-year Treasury. As you can see, we had a massive move on Friday, almost went a full half square. The low was right there on the half square, around 59.32, and the high was just shy of the full square, which is at 63.17 area. What I think this is setting it up for, if you can look at it, is we have these series of higher lows. If we take out the highs here, which are around 164 and change, we're set for a fast move higher. Then we've got one low, one high, a higher low, and a higher high. The trend will have changed. This whole downtrend and this whole, sideways to down correction will be over, and we'll be moving out. So I think the 30-year Treasury, as reviewed by Barrie, was very good. It's on my radar because of the size of the move against the trend of almost all other assets on Friday showed a concerted effort to put money into this asset. And if we get some follow through, Sunday night, Monday, this thing could be off to the races in a fast move.
And what's the square line? I know the other high is probably the key level, but just the
it's like 63.17, 63.18.
Okay.
And again, as we said, those levels are all on the spreadsheet, so you can go into the spreadsheet and see what where we have the levels for each asset. But this is in a position where this week, if we take out these highs and we take out this square, we could certainly see a move. The first move will be up to around 67. And then if it really gets going, you're talking about over 70. So we're watching bonds this week like a hawk. Another asset that bucked the trend on Friday, I have a board with all the tickers on it that I get quotes on, and where I do the trading platform. And this is one that started off very strongly red and ended up green on the day, and that's corn. We ended up not only green up for the day, but we ended up closing on a weekly basis and a daily basis above this full square here. That's right around 590. That to me was a strong showing by something that was dumped from the open, and just you can see the open was down here. We made a low fairly early in the day, and then just worked our way higher all day. We take out this previous high from Thursday, which was around 96.75. We take out that high, then we're going to go up and test this half square and this downtrend line from these highs in May. So corn looks bullish. I've noticed the structure too, where we've got lows, highs, higher lows, higher highs, higher lows, another higher high.
Mhm.
That's an uptrend.
And we clear that square, it really opens up the upside.
Yeah. I mean, I'm looking for corn up in this 660 area minimally, and then challenging the all-time highs. If it keeps this sort of higher low, higher high structure, we're just going to work our way right up.
Mhm.
So again, sign of another asset was up on a big down day. And the other grains, the other major grains like wheat and soybeans were both down on the day. They ended up well above their lows. They got dumped at the open and worked their way higher, but could not get into green territory. So that's why I'm sort of singling out.
But they didn't sell off either, right? They kind of held their own.
From the open, they were higher. They did end down on the day, but I still like wheat. Wheat is still bullish. It's consolidating the big move we've seen in the last 3-4 weeks. Beans is a little behind the other two, but it's still bullish. I think both of them are in sort of consolidation phases before the next move higher. Corn has just been really bucking the trend of those two. So I don't know what specific to the corn market is causing this, but somebody is wanted to buy that thing from the open on Friday when almost all other assets were getting dumped. Anything else you want to add on the corn, Barrie?
No, I think we're good.
Okay. And the other asset that was green on my board was nat gas. Yeah, this is one we've been on it for a couple of weeks. We kind of gave the heads up a few videos back to people. Hey, pay attention to this. It's been frustrating and consolidating, for a couple months now, frustrating all the longs, frustrating all the shorts because it's just been chopping around. But the setup was there that it was, the odds were favoring that it was ready to start its next leg higher. And we got that manifesting this week. We had the false break low that we called out, series of, lower highs, lower lows coming into this off that, the spike high we had on that nice run up. Well, on Friday, we took out a previous high, first time since this all-time high. So that's a big move. We pushed above this square. Nat gas was green. I think it was up 4 or 5% on Friday in a really down market. And with crude down 12, 13%, this thing stayed green. So you can tell there's something going on in this market that's independent of crude and independent of energy, and it's bullish. So the lesson here again is you wait for the corrections to play out. When you get your signals and you get your setups, you're never certain that it's going to happen, but if the risk reward is favorable and the technicals tell you to get in, you get in and you see how it plays out. And this is playing out well for us. I think you're going to see minimal here is the half square, which is around 568. More likely, given the structure and the ABC correction that happened, we're going to get a push. I think either up to this high here, this full square, and more likely, this next leg is going to take us to higher highs. What do you have to add on nat gas?
I think fasten your seatbelts. That's pretty much it.
Yeah.
I think it looks open. It looks good. Looks like we can go challenge that upper trend line at a minimum. So it's and to the correction side, I would say the key level would be that lower square. And as long as we're above that, I think we can certainly go test the highs.
Yeah, and here we have and these are the levels that are in the spreadsheet, right? The lower, the bottom of the square here is the support level, and that's around 508. And in the spreadsheet, we have the resistance, and the current target is the 568.
Mm-hmm.
So
it's good.
But gas looks good. I mean, that's all I have this week in terms of charts. Everything else is in process and being watched. Beans are being watched closely. Gold, silver, as we talked about. Wheat, we're managing the position there. It's bullish, just correcting. The softs were all weak on Friday: sugar, cotton, cocoa, coffee. So money's started coming out of them. and we're watching those, and I'm diligently watching those to see, you know, how these pullbacks play out. Is something bigger happening? Did we get, you know, something major at that high? So far, nothing has signaled as much. Next week we'll do our review of the monthly, so we'll be able to sort of zoom out and get a big picture view of all these things, because that's what I'm relying on with these commodities, because I think we have a, you know, a bigger picture cyclical play there. So we're watching them, and we'll review them on the weekly show when they're set up and sort of ready to go. As of now, the four softs are still correcting. I know you were looking at some of the softs too, Barry. Any comment on those? Additional?
Well, I think they're on sort of on pause mode, let it settle up a bit, but completely, you know, in the bigger picture weekly charts, you know, they're holding their place and looking bullish. So
right. The good news for everybody is that this past week and in sort of the past week and a half, we've seen cycles hit the markets and things are becoming more volatile. Things are moving, markets are moving. And now more than ever, there's the danger of getting whipsawed because they're moving hard and fast intraday. It's all the more reason why you got to have the levels. You got to stick to your technicals, and you know, it can't be, well, I'm just going to hold it and see what happens. No, stick to your level, because this is where these guys will try to separate you from your money by really whipping these markets around. I was commenting on Friday. The moves in the ES were just intraday were really, really huge and sharp and fast. And I commented to Barry, I said, I don't know how you trade this without any levels. It would be damn near impossible. So Barry posts the levels of the fuse lines, which you can use those to help you, you know, handle this volatility. At least it gives you something to trade against, where, you know, hey, I'm wrong if this happens, or I can sell it here or buy it here and have something backstopping you. And the same with the ping pong chart I post. You know, there are levels that you can use to give yourself an understanding of what your risk reward is. And in this game, and especially when it's volatile, that's the key. Anything else you're focusing on this week, Barry? Anything else special to look out for?
well, I think everything.
Yeah.
Everything's on the table, and all the cards are on the table, but mainly the S&P, you know, because that's what I focus on the most. And so we'll be watching those levels. And, you know, if you guys follow us on Twitter, you know, all of our most up-to-date charts are up there in the levels. But I think it's pretty. It's going to be a key week for the S&P to see if we can hold those levels or not. So.
Right, and that'll give us,
and also to see if bond can continue the move. You know, that's going to be important for the next coming weeks and months.
Absolutely. So again, thanks for watching the videos. Please subscribe, like, hit the bell, do everything that YouTube asks you to do to give us the feedback that we're looking for. And best of luck this week, and we'll talk to you next week.
Great. Have a good week. Thanks, Ben.
Thanks, Barry. Bye.